Tonight's budget to forecast much lower economic growth and a pullback in spending. Qantas boss Alan Joyce says the airline was 11 weeks from collapsing at the height of the pandemic. And Taylor Swift breaks Spotify. It's Tuesday, the 25th of October, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. It's very unusual in late October to be doing a budget. I think I've probably covered 15 budgets minimum, maybe 15 to 20 budgets. And it's always such a big event. It's like a 24-hour event. You go to Canberra, you get locked up, do all that sort of carry on in May. Anyway, we're doing it in October, so it's all very unusual and nowhere near the lockdown. So the budget night lockdown was always a big thing, and it's very much restricted this year. So a different type of budget.
Remember, two points I need to make very quickly. Number one is about there's always a big discussion, I understand it, about the food that's served in lockdown.
Yeah, definitely. Party pie, sausage rolls, it doesn't cut it anymore.
No, and the second point was I love how you tried to avoid giving away your age there by saying I've done 15, maybe 20 budgets, 25 plus, but I'm not going to speculate.
Well, in all honesty, it's not 25 because I did come to journalism late, remember. I didn't actually come from school. I was almost 30 by the time I became a journalist.
Okay, all right, that's fine. I'll accept it. You've only done 15 budgets. You are a budget spring chicken.
That's right.
If you will. Now, we will be talking a lot about that today, tomorrow, and it's going to be kind of a big topic of discussion for a while. We've got another interview, though, coming up after the show today, and this is really interesting stuff. You're speaking with Sue Fennessy, who is the founder and CEO of We Are 8, the numeral 8, We Are 8.
Yes, We Are 8 has recently launched in Australia. It basically promises a platform that's free from hate, is good for the planet, and puts money back in the wallet of people using it. Now, we talked to Sue all about it. She herself is an amazing entrepreneur, and she has created this We Are 8. We talk about how it works and really how she wants to reinvent social media. And Michael, I wouldn't put it past her.
Yeah, if anyone's going to be able to do it, Sue Fennessy will be able to do it. But that's coming up a little bit later on. The main story this morning, Sean, we can get ready tonight for a budget that includes spending cuts, a massive downgrade in economic growth, and really the funding of Labor's election promises.
Yes, it'll be very interesting to see how Prime Minister Anthony Albanese and Treasurer Jim Chalmers manages taxes and spending at a time when financial markets don't want too much largesse, but are also wary of the economy going into recession. It's Mr. Chalmers' first budget, and he needs to attack a massive debt while the economy is slowing. Yesterday, he forecast economic growth this financial year of 3.25%. That's not too bad, pretty solid, before it falls to 1.5% during the 2024 financial year. That's well below what Treasury forecast in April this year. The Treasurer will forecast inflation next financial year of 3.5%, still higher than comfortable, but well down from current levels. Now, Dr. Chalmers said there won't be much extra cost of living relief tonight because it would make the inflation situation worse. Now, the UK government felt the brunt of financial markets last month when then Prime Minister Liz Truss outlined what investors thought was irresponsible spending. Dr. Chalmers will not make the same mistake.
Spending cuts, Sean, what do we know about them tonight? How much are we looking at?
Well, we know there will be about $21 billion in cuts tonight, including $10 billion for the government's rorts and waste audit. That's a bit of a catch-all, that one. Another $3.6 billion will be banked from reducing spending on consultants, advertising, travel and legal expenses. What I love about that one is we're going to save $3.6 billion on consultants, advertising, travel and legal expenses. How much do they spend to begin with?
Yeah, if there is that much that can be trimmed, that is a massive line item.
So there's another $2 billion being pulled from coalition grants programs. We've already heard some people in local government areas upset about that too, because some road programs will be at least delayed, if not cancelled. Now, most of the savings will go to Labor's priorities, including higher childcare subsidies, cheaper prescription drugs, and repaying the national debt. Spending on infrastructure, always a massive item, Michael, will be reprofiled. I like that. So a lot of the big projects will keep going, but some of those smaller ones might just see themselves lose some funding.
And spending increases?
Well, the interest payment on Australia's debt will surge because of higher rates, we know that, and welfare payments will jump by about $33 billion over the next 4 years. That's because those payments are linked to inflation, and as prices rise, so too do welfare payments. Old age pensions and job seeker payments make up the majority of that number. Bring on the budget, Michael.
It is a big day for the Treasurer, isn't it? How do you reckon Jim Chalmers would be feeling right now? Because this is like his grand final, isn't it?
That's exactly right. I'm sure he's excited.
Indeed. All right, how about local markets? What happened yesterday?
The S&P ASX 200 closed up 1.5% to 6,779 points. All sectors rose. It was really a great day. The material stocks led the way. BHP and Fortescue Metals both jumped around 2.5%. Tech stocks also did well. REA was up more than 4%. Utilities and healthcare companies also outperformed. Among the large caps, Macquarie Group, Goodman, CSL and Wesfarmers all jumped by more than 2%. Gold Digger Newcrest Mining was up 3%. And building materials company James Hardie Industries rose 4%. But nothing like battery maker Novonix. It was up 33% yesterday. That means in the last 5 trading sessions, it's up 65%. Why? Because last Monday, the US Department of Energy said it was going to negotiate with Novonix around a $240 million grant. Coal miner New Hope fell nearly 5% yesterday after going ex-dividend. It was the worst on the day, at least among the top 200.
And what about international markets?
Oil and gold prices are a touch lower. The Aussie dollar is trading around 63.5 US cents. And Michael, yesterday we talked about diesel prices. Today, it's back to petrol prices. So the website, Compare the Market, reckons motorists have a narrowing window to fill up cheaply, well, relatively cheaply, before the full impact of the reinstatement of the fuel excise tax hits. Already in some capital cities, prices are about $2.10 a litre. Now, what it is, we're about to enter a new fuel cycle, which will include the full impact of the excise. Some servos in Sydney, Melbourne, Brisbane, Adelaide are pumping fuel from the new cycle and charging up to 50 cents a litre more than fuel from the old cycle. So the moral of this story, now shop around. These next few days, fill up, but you'll find huge differences in petrol prices across capital cities.
And those of us driving diesel vehicles have already missed out.
Yes, Michael. We talked about that yesterday. I think we might just leave that now.
Oh, I'm still bitter. Anyway, we'll be back in a moment with the rest of the day's business news. Sean, Qantas CEO Alan Joyce said the airline was just 11 weeks from bankruptcy at one point during the COVID pandemic. That's extraordinary.
Sure is. Speaking yesterday, he said there was a time when there was plenty of costs and no revenue and the carrier was burning through cash. At its worst, it had just 11 weeks of cash left. Mr. Joyce also said if he had his way, the international and domestic terminals at Sydney Airport would be combined into a single super terminal, alleviating a major pain point for Qantas and for passengers. Mr. Joyce was speaking after figures show that Jetstar cancelled 10% of all domestic flights during September, not running late. Cancelled 10%.
Wow.
Brisbane, Sydney, Melbourne flights were hardest hit. 5 of the 11 Boeing 787s they have in the fleet were grounded. In fact, they remain grounded. And Qantas just can't get spare parts for them. That's really the problem. When flights did leave, or when Jetstar flights did leave, 40% of the time they were late. Quite incredible. Qantas recorded a 66% on-time performance rate for arrival, 65% for departures. Its cancellation rate was 2.5%. Virgin was best of all, cancelled about 2% of services and nearly 68% arrived according to schedule.
It doesn't really say that much, does it, when only 68% arrived on schedule and that was the best performer?
Yeah, it doesn't at all.
All right. Now, Prime Minister Anthony Albanese wants an expert advisory panel to come up with a model that would allow the private sector and government to work together to create more social impact investing in Australia.
Yes, so social impact investing is investing with a purpose. The idea is that investors put money into something, maybe it's social housing or the environment, that does good for the economy and provides an adequate financial return. The Social Impact Investing Task Force was created a few years back under the Morrison government, but basically it was ignored. According to the Financial Review, Mr. Albanese wants to revive it, and major bank CEOs have been contacted about potentially helping fund it. It's likely that social housing will be a big part of it. And of course, it comes ahead of the budget tonight, which is expected to fund about 30,000 new social and affordable housing properties over the next 5 years.
Sean, Viva Energy, the company behind Shell and Liberty service stations, has reported its best quarterly sales results since before COVID.
And that's on top of a record half year to the end of June. Sales volumes for the 3 months ending September total 3.65 billion litres. That's a lot of petrol.
Wow, that is a huge amount.
It is, up 20% from a year earlier. Viva is responsible for about 1/4 of the petrol used across the country, as well as a bunch of other things like lubricants, solvents and bitumen. Basically, it imports, refines and delivers fuel across the country. It's a good business at the moment.
Now, Sean, if there's one thing that the media likes more than a rumour, it is a rumour about other media. And there was one doing the rounds over the last few days that Nine was thinking about selling its streaming service Stan. But the group actually used its own paper, the Financial Review, to quash that idea yesterday.
Stan, which was part of the old Fairfax, isn't for sale, but the service is open to a strategic partnership with international content companies. According to the report, Stan is about the number 3 streaming service in Australia, behind Netflix and Disney. The thinking at Nine is that there'll be a shakeout in the market for streaming services as major international content companies realise delivering streaming direct to consumers is much more difficult and expensive than originally estimated. This all comes as Netflix and Foxtel-owned Binge look to launch ad-supported services next year. There's plenty of talk that Disney might do the same, basically lower subscription fees and you get ads. Clearly, the market is maturing in Australia and these streaming services are looking for ways to build revenue, but as far as we can tell, Nine's keeping Stan.
Now, this is an interesting one, Sean. Commonwealth Bank has launched a 4G and 5G phone plan to both retail and business customers.
Yes, it's teamed up with Telco More, M-O-R-E, and anyone who signs up using a CommBank credit or debit card will receive up to 30% off their plan. Now, the bank says taking the discount into account, a 60 gig 5G plan will cost around $42 a month for the first 12 months. Commonwealth Bank reckons that more than 70% of Australians think their mobile plan is an unavoidable expense and 45% want to save money on their plan. Michael, banks aren't banks anymore. They're investment brokers, insurance companies, loyalty programs, foreign exchange intermediaries, and now they're telcos. Is that a good or bad thing? I don't really have a view on that, but more competition in the market should be good for consumers, not always for shareholders.
Sean, CommSec's State of the States report was released yesterday and it shows Tasmania and Queensland are leading the way in terms of best performing economies.
Yeah, that's right. Tasmania is number 1, having benefited from improved rankings in retail spending and housing finance. Queensland at number 2 was the best ever result for that state. Next came the ACT, Western Australia, South Australia, Victoria, New South Wales, and then the Northern Territory. Now, the report takes 8 economic indicators from the Bureau of Statistics, mashes them all together, and comes up with rankings. Among the big states, Victoria has strength in retail spending and weakness in population growth. New South Wales is doing well in unemployment, but weakness in housing finance. And Queensland has strong relative population growth, but weak equipment investment.
Is mashes them together an economic term?
Yes. You find that in many textbooks, they talk about mashing things together. Surely you can trust me on that.
I will trust you because you are the economics authority on this podcast, so I will.
The thing is, you know exactly what I'm talking about, and that's all that matters.
See, I'm going to use that argument next time you pull me up on something. As long as the meaning itself is clear, then it shouldn't be a cause for complaint.
There was always this great debate in journalism about you had to explain everything, but some people would say, but if the reader or the listener or the viewer knows it, why do you have to explain it?
Yeah. Look, I'm on that side as well. And you can kind of get into that, and this is dangerous ground for someone who loves kind of grammar and other things.
The pedants out there.
That if the meaning is conveyed clearly enough, then sometimes to go with the technically correct version can actually make it less clear.
Yes.
Yeah. So look, I'm on board with this, and the only thing I'm not on board with is the use of the term mashing them together.
Oh, I like it. I like it.
All right. Well, that will be a continuing cause of conflict between us. Sean, copper producer Oz Minerals, which has been in the sights of BHP, yesterday downgraded its outlook for the second time this year, pushing its share price to below BHP's offer of early August.
And the board of Oz Minerals knocked back that offer, and since then BHP has said Oz isn't really a must-have for the big Australian. Yesterday, Oz said the cost of producing copper was up 28% over the past year, in large part due to labour and equipment costs. Oz's share price dipped under $25 a share yesterday. That's the price that BHP offered, before finishing the day better than that, but slightly down to $25.21. Now, ahead of the August bid, it was trading in the $17 to $19 range. Just the fact that Oz's share price remains around that BHP offer price means investors still think a deal is in the offing.
All right, moving on to overseas news now, and China finally released its economic growth figures for the last quarter after they were delayed during last week's National People's Congress.
These are important because a stronger China means greater demand for Australian commodities and other products and services. The figures show unemployment rising and retail sales weakening, but there was a pickup in economic growth to nearly 4% from a year earlier, still well below official projections of 5.5%, but better than 3 months ago. The manufacturing sector in the world's second largest economy was mostly behind the better than forecast result.
Sean, 42-year-old Rishi Sunak is set to become the Prime Minister of Britain and has less than 2 years now to turn around the fortunes of the Tories, which I think it's fair to say have been fairly well decimated over the past 12 months.
Yes, Mr Sunak held off a challenge by former Prime Minister Boris Johnson, who yesterday said he wouldn't run for the top job again. Mr Johnson only left office 6 weeks ago, of course, after a series of scandals, and yesterday he said it simply wouldn't be the right thing to do. I think it's more likely that he didn't have the numbers to win. Mr Sunak, who was defeated by outgoing Prime Minister Liz Truss last time around, is well liked within the Tory party, but less so by the general public. He has a massive job to do.
Finally, Sean, the story that I'm sure you have been waiting for. Thousands of Spotify users reported a few problems accessing the music service just minutes after Taylor Swift's latest album, Midnights, was released. I'm sure you are a big fan.
Huge fan. I have told you I've met Taylor Swift and didn't recognise her one time.
Oh, that is one of your greatest stories about when you had a big conversation with her in a hotel lobby.
A long conversation with her and didn't recognise, and went to my partner Jackie, and she pointed out that I'd just spent my time talking to Taylor Swift and had no idea who I was talking to.
My favourite part was that you thought that it was someone that you might have worked with previously.
She looked familiar.
So it wasn't just that you didn't know who you were talking to. You thought you were talking to a friend.
Oh, it gets worse. Anyway, Spotify tweeted about the new album, and suddenly people started reporting outages on Spotify. Notwithstanding that hiccup, the release of Ms. Swift's, my friend's 10th album, became the most streamed album in a single day in Spotify history. Everyone seems to love it. The critics, the fans, even AMP chief economist Shane Oliver, a good friend of Fear and Greed, he's a noted lover of Tay Tay, and he managed to write about the album in his weekly note over the weekend. He's very excited about the 10th album.
That is fantastic. All right, up next is the Fear and Greed Daily Interview, and today, Sean, you're speaking with Sue Fennessy, the founder and chief executive of We Are 8.
Wouldn't it be wonderful if the world of social media was a positive experience for people rather than a negative experience? And that's really what Sue Fennessy and We Are 8 are all about. It's about creating a platform in which people can feel safe. In fact, you can actually make money from it because you will choose to listen to ads. And then if you choose to listen to ads, a very small payment will go to you, which you can have, or you can then send to a charity. It's very much a positive experience. It's just a wonderful, I was going to say experiment. That's probably underplaying it. It is a new social media platform that's just been launched. People should go and have a look at it. And there's great chat to Sue all about it.
Yeah, it's a really interesting one, and We Are 8 supporters of this podcast. And what I've actually started doing is having a bit of a play with We Are 8 and spending a bit of time on there. And what I might do in the next couple of days, Sean, is give you a bit of a report, a bit of an update on how I found it, because I am a fairly avid user of social media. So I consider myself a bit of a social media connoisseur.
Just like me, Michael, just like me. So, yes. Avid user of social media.
Indeed. A social media connoisseur. Sean Aylmer. Indeed. But I will give you a full report. I'll let you know how it's all going, but we'll have a bit of a chat as well about the business model, because it is something very different to the way that Facebook and the like operate. So have a listen to the interview today with Sue. She is a fantastic entrepreneur, so it's definitely worth a listen. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 25th of October, 2022. Make sure you're following the podcast and join us online on LinkedIn, Instagram, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.